All right, let's dive into something really fascinating that's happening in the Bitcoin market right now. You see, while a lot of everyday investors are looking at the price and getting pretty nervous, there's this small, elite group of the world's wealthiest players, and they're making some moves that tell a completely different story.
I mean, it's the question on everyone's mind, right? After that huge run, things have kind of gone sideways, and a lot of people are seriously wondering, is the party over? Did we miss the book? And honestly, you can see exactly why they're worried when you look at a chart like this. The S&P 500 up a solid 14% this year. The Nasdaq is just crushing it at 18% up. And then you've got Bitcoin kind of lagging way behind at just 2%. Seeing that, it's totally normal to think, maybe my money should be somewhere else. But not so fast.
Because while those public charts are telling one story, the private actions of what the pros call smart money are signaling something completely different. It seems like they see all this fear and doubt not as a warning sign, but as a massive, flashing green light.
As one of our sources put it so well, the biggest players in the game, they're not even being quiet about it anymore. They are practically shouting their moves from the rooftops. And if you know how to listen, their actions are telling you exactly what they think is about to happen. So, just so we're all on the same page here, when we say smart money, we're not talking about your buddy who day trades on his phone. No, we're talking about the huge, massive pools of capital controlled by institutions, by legendary investors, the people whose entire careers are built on being right when everyone else is wrong. Okay, so let's stop talking in hypotheticals and look at some actual real-world examples. We're going to follow the money and see how these big bets are directly contradicting all the fear you see in the headlines. First up, Harvard's endowment. Now think about that. This isn't some hedge fund trying to make a quick buck. This is the largest university endowment in the world, managing money that's supposed to last for centuries. And they just made a jaw-dropping move. They didn't just dip a toe in the water. Nope. They cannonballed right in with a staggering $330 million investment into Bitcoin. That is an enormous vote of confidence from what is probably one of the most conservative, long-term focused investment pools on the entire planet. But here's the detail that really gets me. Get this. Harvard's fund now owns a bigger position, more shares, in a Bitcoin ETF than it does in Microsoft. Let that sink in. Microsoft, one of the biggest, safest, most foundational companies in the world. That's not just an investment. That is a powerful statement about where they see future growth. Okay, next up, let's talk about someone even more surprising. Warren Buffett's Berkshire Hathaway. I mean, these guys are famously, almost stubbornly skeptical of tech, but it looks like something big just shifted their thinking. They just plowed $4.3 billion into Google. Now, I know what you're thinking, that's not Bitcoin. And you're right, it's not. But you have to read the signal here. This tells us that one of the most cautious, value-focused investors in history thinks the pessimism around tech and other risk-on assets has gone way, way too far. And historically, when the tech sector gets hot, Bitcoin tends to ride that wave. So what we're really witnessing here is a changing of the guard. You've got the early adopters, the folks who bought Bitcoin for basically nothing, and hey, good for them. They're cashing out and taking some well-deserved profits. But stepping in to buy what they're selling is this whole new class of big money, the Harvards of the world, and they're deploying billions, kicking off a whole new phase of institutional investment. And this isn't just a theory. You hear it from major players in the space, like Saylor. He's convinced that all that selling from the early guys is pretty much done. He believes we've built a really solid floor at these prices, and from here, the only way to go is up. But, this whole story isn't just about Bitcoin looking good. A big part of the equation is that for some of these really smart investors, the traditional stuff, well, it's starting to look a whole lot less attractive. And that forces you to ask a really important question. If you're looking for growth over the next 10 years, is the S&P 500 really the safe, can't-miss bet that we've all been taught it is? Well, the legendary investor Howard Marks has a pretty sobering answer. He's looked at the history, and the data is crystal clear. When the stock market's valuation, its PE ratio, is as high as it is right now, the returns you can expect over the next decade are pretty awful. And this table here just lays it all out. It's a really simple relationship. The more expensive the market is when you buy, the lower your returns are going to be for the next 10 years. And according to Marks, where we are today, history suggests we should brace ourselves for returns between -2% and +2% a year.
I mean, that's basically treading water, or even sinking once you factor in inflation. Okay, so let's pull all these threads together. What does it all mean? How do we read this powerful but kind of subtle signal that these big-time investors are sending us?
Well, it seems to be this three-act play. Act 1, widespread fear. Everyone looks at the sideways price and thinks the good times are over. Act 2, contrarian action. While everyone's panicking, the smart money quietly steps in and starts buying, a lot. And that leads to Act 3, the signal. Their actions are telling us that the people with the most on the line believe the risk-to-reward ratio looks amazing right now, and that the bottom is probably already in.
So the bottom line, the real takeaway here, is that even though the daily price chart might give you a headache, the flow of actual capital from the world's biggest and brightest is sending one unified message. They think all this pessimism is completely overblown, and they are getting in position for whatever comes next.
So, it seems pretty clear that this quiet phase of accumulation is happening right under our noses, led by the folks with the deepest pockets and the longest game in mind. They are making their move, loud and clear. So the only question left is, what signal are you going to follow?